Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to hold the opportunity to attract such a distinguished audience. If you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone numbers +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe channel name, Areca Capital's channel. The owner of this YouTube channel is Areca Nguyen. She's a personal financial advisor. You can contact her with the email hongzhengyuan@vcc.com.vn with the phone number is +8491 432 6556. And we always welcome you to our office on the 11th floor, 119 Đạo Street, Hoàng Kim District, Hà Nội, Vietnam. And today, I'm gonna share with you about the GEG. GEG has an estimated 2% market share in Vietnam's young and fragmented renewable energy sector and had 446 megawatt of renewable power capacity, 84 megawatt of hydropower, 130 megawatt of wind power, 202 megawatt of solar power, and 30 megawatt of rooftop solar as of end 2021. And today is the 6th January 2023, with the current price of GEG is 15,350 Vietnam dong. Target price 15,100 Vietnam dong. As you can see on the screen, this is the report which was collected by Viet Capital Securities about GEG on the 12th December 2022, with the current price is 13,000 Vietnam dong. Target price 15,100 Vietnam dong. Last target price 23,300 Vietnam dong. Upside to target price 16.2%. Convertible pref issue to help control leverage. We cut our target price for GEG by 35% to 15,100 Vietnam dong per share, but upgrade our rating from market perform to outperform as GEG's share price has slumped 42% over the past 3 months. GEG will be earliest beneficiary under our coverage when the renewable power sector gets a new pricing mechanism. We also believe GEG's PB of 0.9 times is attractive. Our lower target price is due to a 21% cut in our aggregate 2022 to 2026 forwards net profits after tax forecast and 100 basis point and 200 basis point increases in our equity risk premium and cost of debt assumptions, respectively. We forecast 2023 forwards core net profit after tax amount to rise 21% year-over-year due to higher profits from GEG's solar portfolio and for existing wind farms, despite a potential loss from the new Tân Phú Đông wind farm, 100 megawatt, which we expect to come online in early 2023. We forecast an 18% EPS CAGR in 2021 to 2026 forward, which is driven by doubling wind power capacity from 2 additional farms, 130 megawatt coming into operation after 2022. The stable operation of 5 solar farms and 12 hydropower plants and decline interest expenses. Upside catalysts further gain from wind power divestment, earlier than expected operation of Đức Huệ 2 solar farm, downside risk lower than expected loan disbursement in 2023 that failed due payables. We expect GEG to issue 64 million convertible preferred shares instead of a rights issue. In October 2022, GEG announced BOD resolutions on a convertible preferred stock private placement of 64.2 million shares for DEG in H1 2023 to invest the liquid to solar farm VPL2 wind farm with an offering price of 10,000 Vietnam dong per share. The exercise right is at least 24 months after issuance date, and the conversion price is negotiable but not lower than BVPS at the issuance date. We estimate a maximum conversion ratio of 0.9. In our view, this 6-year preferred stock issuance with a dividend of 6% per value will support GEG to manage its leverage ratio and partly ease interest expense pressure from its capacity expansion. We factored this preferred share issue into our model in 2023 and removed GEG's previous plan to issue 30 million common shares at 14,000 Vietnam dong per share. GEG divested its 45% stake in Tân Phú Đông 1 and 2 wind farms, but maintained its 55% controlling stake. In Q3 2022, GEG completed its divestment of number 1 New Renewable Energy JSC, which fully owns Tân Phú Đông 1 and 2. GEG recorded a gain of 166 billion Vietnam dong under financial income in Q3 2022 and received 864 billion Vietnam dong in cash. Per GEG, this amount is not reflected in the full transaction value. The company can recognize the remaining divestment gain in 2023. We expect the Tân Phú Đông 1 wind power project to come online by early 2023. As of end Q3 2022, GEG has disbursed 3.4 trillion Vietnam dong for this project. 75% is total investment capital. Now we move to the next part. 9 months 2022 recap. The investment gain outweighs increased interest expenses. Figure 1. GEG's 9 months 2022 results. Sales volume. VCSC comments. 9 months 2022 sales volume trailed our expectation, which we attribute to weaker than expected sales volume for wind power plants. Hydropower. Hydropower experienced solid volume growth thanks to high rainfall. Wind power. 9 months 2022 volume of wind power plants only fulfilled 57% of our previous 2022 full-year forecast. Revenue. Upbeat sales growth was mainly thanks to contributions from 3 new wind power plants with a combined capacity of 130 megawatt, nearly 30% GEG's total capacity. Financial income. Driven by one-off divestment gain of 166 billion Vietnam dong, financial expense due to interest expenses arising from new wind power projects. Net profit after tax MI. Stellar result as was driven by one-off divestment gain. Core net profit after tax MI. 9 months 2022 core net profit after tax MI only fulfilled 48% our previous forecast due to weaker than expected sales volume for wind power plants and additional financial expenses. And next, that is the 2022 forwards. Net profits after tax bolstered by divestment gain. Figure 2, BCFC's 2022 forecast for GEG. Sales volume. Due to our lower forecast for wind farm sales volume, which outweighs higher hydropower volume. Hydropower 1 and 2, due to high rainfall that leads to higher than expected volume growth. Wind power 1, thanks to full-year contribution of GEG's wind power plants, we expect Q4 2022 sales volume of 90 million kilowatt-hour, more than 52% year-over-year. 2. Following 9 months 2022 results. Revenue 1, thanks to additional revenue contribution from 3 new wind-powered projects, solar capacity of 113 megawatt that came online before in October 2021. 2, mainly due to weaker sales volume from wind power plants, which outweighs higher sales volume from hydropower plants. Hydropower 2, thanks to our higher sales volume assumption. Wind power, due to weaker than expected sales volume. Others, driven by further operating and maintenance activities and following 9 months 2022 results. Financial income 1, mainly driven by one-off divestment of 45% stake in number 1 new renewable energy JSC that fully owns the Danfudong 1 and 2 wind power projects. Financial expense, mainly due to interest expenses arising from 3 new wind projects. Net profits after tax amount, mainly due to divestment gain. Core net profits after tax amount 1, thanks to higher interest expenses outweighing contributions from the 3 new wind projects. 2, due to our downward revision for wind power plant sales volume. And now let's go on to the third part, that is the 2023 forwards. Rising interest expenses to dampen earnings. Q3 Figure 3, BCNC's 2023 forecast for GEG. Sales volume. BCNC comments, driven by the capacity of wind power plants doubling. Hydropower, we expect sales volume of hydropower plants to normalize in 2023. Solar farm, we assume a utilization rate of 23% in 2023 compares to 2022's low base of 19%. Wind power, we expect a full-year contribution from the Danfudong 1 power plant, 100 megawatt, 77% GEG's 2022 wind power capacity in 2023, and a higher utilization rate for wind power plants. Revenue, driven by the contribution from Danfudong 1 wind power plant and higher utilization rate for solar farms. Financial expense, mainly due to interest expenses from the Danfudong wind power project. Interest expense, we estimate additional interest expenses of 391 billion Vietnam dong from the Danfudong 1 wind power project. In addition, we expect the average cost of debt to be 11.8% in 2023, more than 3.5 ppts compared to 2022, as some loans for the 3 wind farms coming online in Q4 2021 were regionally dispersed. As of Q3 2022, GEG's bond balance was 1.2 trillion Vietnam dong, 15% of total debt, largely from issues managed by TCB and VCB. 1 trillion Vietnam dong will be due in H2 2024. Minorities in interest. Due to our projected loss of 71 billion Vietnam dong for Tân Phú Đông 1 in its first year of operation. Net profits after tax MI we expect 2023 net profits after tax MI to plunge 22% year-over-year without having a divestment gain like in 2022. Core net profits after tax MI. We forecast 2023 core net profits after tax MI to rise 21% year-over-year due to higher profits from solar portfolio and for existing wind farms despite the potential loss from the new Tân Phú Đông 1 wind farm. Divestment gain. On the 3rd June 2022, GEG's BOD approved the divestment of number 1 new renewable energy JSC. This JSC has 45% stake in Lianjiang Wind Energy JSC, which owns the Tân Phú Đông 1 100 megawatt and Tân Phú Đông 2 50 megawatt wind power projects. In Q3 2022, GEG completed the divestment of number 1 new renewable energy JSC. The buyers were not disclosed and recorded a gain of 166 billion Vietnam dong under financial income. We believe this amount has not been reflected in the full transaction value. GEG can recognize the remaining divestment gain in 2023, pending a fuller review. Tier 4 GEG ownerships in subsidiaries assets. Resolution on preferred stock private placement. In October 2022, GEG announced BOD resolutions on the convertible preferred stock private placement of 64.2 million shares, equivalent to 20% of the total number of shares pre-issuance, and 17% of shares post-issuance. For DEG, the offering price is 10,000 Vietnam dong per share, and the conversion price is negotiable, but not less than book value per share at the preferred stock issuance date. In addition, the conversion ratio equals the offering price divided by the conversion price, which we estimate at a maximum of 0.9 times based on book value per share as of the 30th September 2022. The proposed cash dividend is 6% on par value for 6 years, and the exercise rights is at least 24 months after the issuance date. In our model, we assume this issuance will be completed in 2023. Process of 642 billion Vietnam dong will be dispersed to invest in GEG's subsidiaries and increase its working capital. Specifically, GEG will invest 321 billion Vietnam dong in VPL Energy JSC and 240 billion Vietnam dong in TTC Đức Huế Long An Power JSC to construct the VPL2 near shore wind power project and TTC Liquid Fuel Solar Farm, respectively. GEG will use the remaining 81 billion Vietnam dong to repay its debt to Agribank. The timeline for disbursement is expected for Q1 to Q2 2023. We previously incorporated VPL2 into our forecast. Therefore, the TTC Liquid to Solar Farm represents upside to our revenue and PAT forecast and valuation. VPL2 is near shore wind power project that is included in PDP 8 draft. The project's expected sales volume is 92 million kilowatt hour, and its expected total investment capital is 1.5 trillion Vietnam dong. We expect it will enter operation in 2025. Meanwhile, the Liquid 2 solar farm's total investment cost is 900 billion Vietnam dong, and its expected sales volume is 73 million kilowatt hour. GEG plans to bring 100 megawatt Tân Phú Đông 1 wind farm online by end 2022. In Q3 2022, GEG increased its investment in the Tân Phú Đông 1 wind power project, 100 megawatt to 3.4 trillion Vietnam dong. GEG guides for the preliminary investment cost of this project to the 4.5 trillion Vietnam dong, 184 million US dollar, exclusive of VAT, which is in line with our expectation. In addition, management emphasized this wind farm and VPL2 30 megawatt on transitional renewable power projects, as these projects were not granted a commercial operation date before the feed-in tariffs deadline on the 31st October 2021. Despite having received investment approval, transitional renewable projects in Vietnam include 4,000 megawatt of wind power capacity that has finished construction by the mid-October 2021 deadline. In addition to new wind power projects that are under construction and have already secured investment approval, the government is trying to launch a new pricing mechanism for these projects to help maintain investment into the renewable energy sector. GEG expects that Tân Phú Đông 1 can be a reasonable IRR of 10% to 12% based on its auction price assumption that is 10% to 15% lower than the previous subsidized tariff. Thanks to the clearer price mechanism, Vietcombank has agreed to finance 70% of this project, according to GEG. In addition, GEG is trying to arrange capital for its investment in VPL2. Now let's take a look on the screen, and I will show you guys about the valuation. We value GEG using a discounted cash flow approach 10-year, as we believe is well suited to capture the company's long-term projected cash flows. We maintain our 0% valuation discount to set our target price compared to the 15% valuation discounts we apply for other power stocks in our coverage. Reflecting our view that GEG is the the only company under our coverage that currently focuses on renewable energy, and our expectation that its selling price should not be subject to a downward revision during its PPA review, like what happens with thermal power and hydropower plant PPA prices. In addition, as renewable power companies are not part of the competitive generation market, we expect they will not face the risk of negotiating contracted volume every year like traditional power plants. Furthermore, we expect GE's strategic partnership with uh, Japanese power company JERA will help us to expand its capacity and potentially improve its operational efficiency with modern technology and obtain lower interest rates via refinancing. In this update report, we cut our target price by 35% due to a 21% cut in our aggregate 2022-2026 forward net profit after tax forecast. 100 basis point and 200 basis point respective increases in our house cost of equity and cost of debt assumptions and lower terminal growth rate. As a result, we derive a target price of 15,100 Vietnam dong per share for GEG. We note that we reduce our terminal growth rate from 0.5% to 0% to be consistent with other stocks in our coverage. We usually use a 1% to 2% terminal growth rate for 5-year cash flow models and a 0% terminal growth rate for 10-year cash flow models. Figure 5, GEG's valuation. DCF valuation assumptions. GEG's business segment is classified as a special business segment that is eligible for a favorable tax rate. Currently, renewable energy projects have a 0% rate for their first 4 years of operation, 5% tax rate for the next 9 years, and 10% rate for the next 2 years before increasing to the normal corporate income tax rate of 20%. Currently, we use an average tax rate of 7% as our CIT corporate income tax rate assumption. Figure 6, DCF valuation. Figure 7, cash flow projections. Regional peers. We have selected regional peers that are power plants in Asia. All of these companies are power generators, but they are not perfectly similar to GEG due to differences in power types, capacity, and market mechanisms. Notably, GEG's small power capacity compared to the companies in our selected peer group. In addition, we make a comparison between GEG and the other listed power companies in our coverage. We see that GEG is most closely comparable to PC1 as both companies focus on hydropower and wind power generation. Figure 9, selected peer comparison. Figure 10, historical median trailing PE of GEG compares to peers. Recommendation history. financial statements. Appendix. New prices for renewable energy are in line with our expectations. Our on the 20th November 2022, EVN proposed new prices for transitional renewable power plants, which are 15% to 20% lower compared to the previous favorable feed-in tariffs. We note that renewable power plants must enter negotiation with EVN to get these new tariffs. Transitional renewable projects include 4,000 megawatt of wind power capacity that finished construction but missed the October 2021 deadline for the favorable tariff. In addition to new wind power projects that have already secured investment approval and are under construction, we expect this proposal to be approved in 2023. We also expect the same mechanism for completely new renewable power projects, include GHG's greenfield projects. JERA, a new strategic shareholders. Japanese power company through its subsidiary JERA Asia has signed a share purchase agreement with the International Financial Corporation and Armstrong Asia Clean Energy Fund to acquire its entire stake in GHG. As a result, JERA is now GHG's largest foreign stakeholders with 35% ownership. According to Nikkei Asia, the deal is JPY 15 billion 112 million US dollar, which implies an acquisition price of 25,000 Vietnamdong per share, a 10% to 20% premium compared to the current market price. We think this is reasonable given other interests that strategic partner usually has over financial investors, such as having a certain degree of control over the company and or receiving priority to directly invest into other projects. We believe JERA can have positive impacts on GHG, such as improving its operational efficiency with modern technology and providing cheap funding for future projects. JERA is Japan's largest power generator with a total capacity of 80 GW in Japan and more than 10 countries on 4 continents. In Japan, JERA operates 26 power plants with a total capacity of 66 and 33% market share. In other countries, JERA has a capacity of 11 GW, including 1.7 GW of renewable energy. Acquiring a stake in GHG is part of JERA's strategy to expand its investment in clean energy and reduce CO2 emissions. As a top-tier player in the global power industry, with advanced technology for providing operation and maintenance services for power plants. JERA will provide technology and expertise to support GEG's parent company TTC Group and GEG to boost their renewable energy capacity to more than 2,000 megawatts. Figure 16, GEG's projected corporate structure. Investment cost of wind turbines and solar panels will continue to trend lower through 2050, according to the International Renewable Energy Agency. Improvements in technology, manufacturing processes, regional manufacturing facilities, and competitive supply chains are the main drivers that will put downward pressure on turbine and solar panel prices in the future. The IREA forecasts that total installation cost of onshore wind projects will decline to 0.8 million US dollar, 1.4 million US dollar per megawatt by 2030, and 0.7 US dollar to 1 million US dollar per megawatt by 2050 as the global compares to the global weighted average of 1.3 million US dollar per megawatt in 2020. For offshore wind projects, average total installation cost will drop to 1.7 million US dollar, 3.2 million US dollar per megawatt by 2030, and 1.4 million US dollar to 2.8 million US dollar by 2050. For solar panels, investment costs are expected to decrease to 0.3 million US dollar to 0.8 million US dollar per megawatt by 2030, and 0.2 US dollar to 0.5 million US dollar per megawatt by 2050 compares to an average of 0.9 million US dollar per megawatt in 2020. Therefore, we believe lower investment cost will help to maintain the profitability of new projects, even with lower FITs for solar and wind power projects in the future. Figure 7. Global weighted average total installation cost of solar panels in 2010 and 2019. Figure 18. Global weighted average total installation cost of wind plants. Figure 19. Renewable energy targets of select Asian countries. Figure 20. Irradiation for solar power development in Vietnam by region. Global horizontal irradiation, Vietnam. Vietnam's potential wind offshore capacity projection, according to World Bank. The World Bank believes that Vietnam has great potential to expand offshore projects. VCSC rating system. And that brings me to the end of my presentation about GEG, Zalai Electricity. And if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can support you. Please like, subscribe our channel, and share this video to everyone to know more about our channel. So thank you for listening and see you next time.